My name is Beth Hartleb. I'm the owner, founder, CEO, and bottle washer for PRISM HR Consulting. We will be celebrating 22 years in business. It's November 1st. And we provide a full suite of HR support and services to businesses, whether you have existing HR in-house or not. So we can help supplement that. Next slide. Next slide. So just want a reminder, you probably know this, but we know that this bill was signed into law July 4th by President Trump, but it is retroactive to January 1 of 2025. And the focus of my talk today is no tax on tips, no tax on overtime, from the HR perspective, from that HR lens. This law is also in effect until 2028 tax year. It is set to expire at that time. Next slide. All right, so I'm going to start with no tax on tips. So there are two things to keep in mind here. The qualified tips under this law mean voluntary, so cash tips, credit tips. If you're signing your credit card for lunch or dinner and you add a tip, that will apply. And also if you have tip pooling programs at your place of employment. Mandatory gratuities, though, are excluded. What do they mean by mandatory gratuities? How many of you have been out to a large party dinner at a restaurant? Okay, pretty much everybody. And whether you had good service or not, you're on the hook for 15, 18, or 20% gratuity, right? That's considered mandatory because the customer did not voluntarily pay that tip. So mandatory tips from the employee is excluded under this law. Payroll taxes will still apply, of course, as normal, and the deduction limit per worker is $25,000, and adjusted gross income thresholds are either $150,000 for single filers or $300,000 for joint filers. Next slide. So one thing to keep in mind, and we actually got this early, just in time for this presentation, which was nice because the federal government is not always known for their timeliness with this information. But on September 22nd, they released a preliminary, and I note this is preliminary, occupation list. And the reason why is because they are trying to establish guardrails with this law to prevent abuse, right? Because all of a sudden now people are like, hey, I get tips, or hey, I worked overtime. I'm going to take these deductions. Well, not so fast. There is an occupation list, has 70 plus occupations. I have a PDF link up there. I highly recommend you check out this link and you set yourself up for notifications from the IRS and the Treasury Department because they may be adding or adjusting this. This list was supposed to come out October 2nd, so we have it now, but again, remember that this may be subject to change. I just pulled a few relevant Nevada occupations, which I think are self-explanatory for most. We have a huge service industry here, so any of those tip workers in those classifications that you see listed would certainly be eligible to take this deduction. Next slide. All right. One thing I want to say about the no tax on overtime, we just finished the tips. No tax on overtime. Really important to remember that this is a federal law. And as such, we follow federal law under the Fair Labor Standards Act, which acronym is the FLSA. The Fair Labor Standards Act sets wage and hour law at the federal level, but states can have their own laws as long as they are more generous than what the feds are providing. And in Nevada, and maybe, how many people are in a multi-state environment here? Anybody? Okay. So you want to check your state laws as well for your overtime laws to check that out and see, make sure that you've got all that lined up in your payroll systems. So under Nevada, right, we pay overtime and time and a half over 8 hours in a day. We call it daily overtime, and that is based on how much the worker is earning per hour. If they're earning less than 1.5 times the Nevada minimum wage, they are eligible for daily overtime. So if you have someone who works 9 hours in a day, 1 hour of that day is going to be paid at time and a half. That is not the federal law. Under the FLSA, overtime is only calculated over 40 hours in a work week, Remember, you as employers, you define what that work week is. So if you have someone who works a total of maybe 9 hours on Monday, the rest of the time they're keeping their schedule, but their hours are not exceeding 40 in a work week, there is no deduction here for overtime, because the daily overtime in Nevada would not count toward this, okay? So as you're going back through your payroll records, you want to make sure that you're not counting just like all those daily overtime payments that you may have made. You want to look at what the employee has worked in a work week. If it's over 40 hours, those hours in excess of 40, and only the half piece, the premium piece, is eligible for the no tax on overtime. So as I just explained this, we're going to talk a little bit more about employee communications in a moment, because as you can imagine, this is probably going to be a bit difficult for employees to get their heads around in terms of, hey, I made all this overtime this year. Well, hold on a minute. Not all that's going to count. Okay? We also have in Nevada a 410 schedule that is permissible by mutual agreement between the employer and the employee, which means that that person, if they work 410s, right, 4 days, 10 hours, they are exempt from that daily overtime calculation. So if you have anyone that falls in that category, again, if they're working 10 hours in a day, that is not going to count towards this either. So you just want to remember federal law versus Nevada law versus any other states that you may have operations in and employees who are non-exempt, earning overtime. That's something to keep in mind. Next slide. All right, so this is the dreaded part. We have a retroactive look-back period. Thank you very much, federal government. They just let us know this, right? So we have to go back to January 1st, 2025. How many people are doing their own in-house, like through QuickBooks or something, payroll? Okay. How many have like ADP, Paylocity, something like that? Okay, you're probably in better shape here. I have checked with some of the payroll providers. The last I've heard is that ADP has not quite figured this out yet, but Paylocity has. They are usually way ahead of the game when anytime we have legislative changes. So if anyone happens to be on that platform, my understanding from Paylocity is that they've already set up codes where you can run and generate reports on this. So everyone in this room is probably going to have a different process for how you do this look back period and this review. It may be manual. You may have to extract some reports out of your homegrown system or QuickBooks system. Or if you have a payroll provider, I'd say as soon as you leave here today, if you haven't already, check with them and see what kind of support they're going to provide to you. See what kind of reports you can generate out of the system. See if there's a way that they can do some custom reporting for you to cut down on the time that this would take to actually do a manual look back on here. So again, what you're looking for is weekly overtime, over 40 hours in a work week, tips that were reported, and also the IRS has reasonable methods for doing this. And I kind of laughed when I saw that term, like, okay, what does reasonable methods mean? So let's go to the next slide and talk about that. Okay, so basically they want you to prove it. They don't want you to guess. They don't want you to ballpark it. They don't want you to selectively pick people that work for you and say, oh, we're just going to do this for our bartenders or our servers or what have you. So you want to always be audit ready. And I'm not suggesting that anyone is going to experience an audit about this, but you never know, and you want to make sure you have all your documentation. So as much as you are able to get clean reporting out of your payroll system, your point of service system, if you have one, any kind of reports you can get that show what overtime was paid to employees and any kind of employee tip reports, anything around your policy with that is really important as you move forward. And remember, you're also going to probably need to show this to employees as well, because this information may be challenged. Next slide. So I'm going to do a quick detour here just for a moment, because anytime we have a federal law, a new one that comes out, what many don't consider is the tentacles on these laws and how it impacts other laws other processes and other policies that we have in the HR space. So now is a good time as we enter the last quarter of the year, kind of do a self-audit, if you will, and just take a look at how you have your positions classified. We have, under the Fair Labor Standards Act, exempt and non-exempt employees. To be exempt, an employee's position, not the employee, the position the employee is working, has to fall into one of these exempt categories, okay? And also they have to meet the salary threshold test, so they have to earn a minimum of what's shown on the slide. And the third test for exempt status is that they're paid a flat salary. They're not paid by the hour. Okay, so these are all things to keep in mind as you start going back and you're running these reports, kind of taking a look at your positions and making sure that you don't have any classification issues with your positions today. And if you do, think about how are we going to move forward and to correct that to make sure that we're in compliance. Next slide. This leads me to the next issue, which is job descriptions. Some companies don't have them at all. Some have ones that are not really job descriptions, they're recruiting ads. Other companies haven't looked at them in 10 plus years and they're sitting on a shelf collecting dust, okay? It's gonna be really important for you to have clean, up-to-date, compliant job descriptions. And there's a lot that goes into job descriptions. There are essential functions. If you have 15 or more employees, the Americans with Disabilities Act may apply to you. You have to make sure you have language in there about that. But you also want to make sure that you're looking at these job duties and making sure that they're updated and making sure that your classification of exempt and non-exempt is correct. If you are not able to support how you have classified a position based on the job description, you may be challenged on that as an employer. So another thing to add to the to-do list as we go into fourth quarter is take a look at those job descriptions. Make sure that they're accurate. Make sure you're comfortable with them. Make sure that you put a good faith effort in to analyze those jobs to the best of your ability. Because again, if you're audited or challenged by anything along those lines, that may become an issue and that document is going to come into question. Next slide. Oh, can you go back a minute? I saw we had another screen. Okay, next slide. The other thing I want to talk about is handbook policies. So if you have a handbook, great. You should have one, no matter how many employees you have. It's good practice. But we have a law. We have a law that you cannot discipline, retaliate against, prohibit discussion around pay and compensation between employees. And so one of the things I started thinking about, being in HR for over 30 years, is how is this going to affect employee communications, morale, and these laws and these parameters that we have to work in as employers. And so you want to be really careful that we're not prohibiting employees from discussing pay, but depending upon what industry you're in, depending upon the type of workers you have, it is almost inevitable that once you do a communication piece about this to employees, not only is going to be a tremendous amount of confusion, but more than likely there's going to be some comparison going. How much overtime did you work this year? How come I didn't get the opportunity to work that much overtime? Hey, you're getting all these tips because you have a better shift than I do. This isn't fair. What about internal pay equity? How come you're making less per hour than I am, but we're doing the same job? These are going to come up. It's inevitable. So important as employers that we prepare appropriately, but we also allow for constructive conversation around this topic. Another thing to do, to add to your fourth quarter list, look at your handbooks and make sure that you don't have any language in there that's prohibiting employees from discussing pay and compensation. If you do, I highly recommend that you remove it. Next slide. So employees, I've actually been following some social media, and it's interesting because I assumed, employees are going to think this is great. I'm going to get more money. There's more money in my pocket. But in fact, I've seen a lot of negative or confusing comments on social media around this. And this is local to Nevada, usually in the service industry, where people think that this may actually hurt them. It's not going to help them. There's a lot of confusion around how this actually works and how is this going to benefit me? And remember, again, I'm not an accountant, but people really need to get some kind of advice on this, and we haven't left them much time to do this, right? It's almost October 1. So my recommendation is if you work with or partner with accountants, if someone's willing to come in and sit with your employees and provide some workshops or give some advice on this, that would be extremely helpful so that they can figure out what they want to do. And remember, they only have about 3 months left if they want to change any of those tax exemptions, right? So this is going to impact every employee a bit differently, but it's also important as employers to be aware that there's some negativity around this. There's a lot of confusion, and we really have to do a good job as employers to make sure that we keep morale up about this, and that we keep it positive, and we craft communications appropriately. Next slide. These are some items I suggest that you have in employer communication, and I would suggest that this go out very soon. You definitely want to talk about who is eligible and who is not eligible and why. You can reference the occupation code list. The key here, I think where most of the confusion is going to be, is on overtime. And how come it's only counted after 40 hours when I worked all this daily overtime? So we're going to have to get really clear and use specific language on that in terms of what amounts of overtime is going to apply versus not. If there's any retroactive adjustments, if you hopefully you have a safe harbor policy in your handbooks where you're basically telling employees that they see a problem or an error in their paycheck, they're to report it to you immediately. That's important because you want to handle these situations in-house. The last thing you want is an employee to file a claim with the Department of Labor. It is a nightmare. I have gone through this with clients. They will open your payroll books for the last 2 to 3 years, and they usually err on the side of believing the employee. So it's a bit time to look at your payroll system, your payroll practices, making sure that the employees are agreeing to the time that they're paid by signature or some other electronic method. But again, if you think there's any adjustments that need to be made, communicating that effectively, which is not going to lead employees to question every paycheck they've received from you in the last year and possibly go outside and talk to the Department of Labor about this. You don't want that. You want to talk about, thank you. If you can go back to the payroll taxes, talking about payroll taxes are still going to apply. Future reporting will change a bit. Their W-2s will look different, and certainly give them a contact that they can call for any questions. Next slide. Okay, so these are your action steps. Next steps, identify those roles, look at those occupation codes, make sure that your job descriptions and your positions line up, look into your payroll systems or talk to your payroll providers, recalculate any retroactive wages that may be due. You want to audit your W-2 reporting, audit your FLSA classifications and salary levels. Definitely communicate and train staff and managers, maybe give managers an FAQ sheet to help them with this. And certainly set yourself up for monitoring for the IRS and the Treasury updates.